Good afternoon, everyone in India, and a very good morning to friends and associates from Germany. A very warm welcome on behalf of the Indo-German Chamber of Commerce. Today, we have a very important and an interesting discussion on the Union Budget 2021-2022, which was presented and prepared in unprecedented times at a time when India's economy has been reeling under the after effects of COVID-19 induced lockdown. Presented by the Union Finance Minister, Nirmala Sitharaman, at Parliament this Monday, included some key important sectors which are very crucial for the country, with a total spend of around 2 lakh crores for healthcare, rupees 35,000 crores for the COVID-19 vaccine, rupees 1.110 lakh crores outlay for railways, with the government aiming to complete 11,000 kilometers of national highway infrastructure this year. I think the last year has been special, and the coming months and the year will also be very special. To understand a bit more about Union Budget 2021, and more important, its implication on business, IGCC is pleased to welcome today DMD Advocates, members of IGCC, with a very good panel of taxation experts. Our speakers include DMD partners Sachit Jolly and Tushar Jarwal, with Senior Director and Chief Economist Sanjeev Malhotra. Sachit and Tushar, we are very much happy to welcome you today, and more important, looking forward to hearing from you. And and later, of course, we will be taking some questions as well. So over to you, Sanjeev, for moderating this session, and looking forward to an interesting session. Thank you.
I think, Sanjeev, you're on mute. We can't hear you.
Thanks. Yeah, I was just getting on. Thanks, Sonia, and thank you, Indo-German Chambers, for having us over. First of all, I just wanted to make sure that is the slide deck visible?
Yes, please go ahead.
All right, thank you very much. So as Sonia mentioned, these are unprecedented times, and what all the humanity has seen in last year or so, I think is way beyond most of our imaginations. But moving on to budget, I think somewhere a lot of themes of what we have seen and gone through in the pandemic is reflected as part of what the finance minister spoke and what the government has proposed. But there's another side to it, which I think is more important, that a budget need not be and should not be, more importantly, a one-off or an annual event. And actually, the current budget is no better example to make the statement that budget needs to be a continuation of the policy reforms that the government intends to bring in. And we see a lot of color of that in the current budget. And of course, we'll talk about it. Just to put a context here, the policy and the structural reforms that the current government intends to bring in has been a work in progress. To me, the last year has been a year of distraction. And I am very glad to see that a lot that has been proposed in the current budget actually takes us away from the so-called survival mode to a growth mode, so to speak. To start, and just to lay out how we intend to run this session, is that I'll quickly put forward some basic numbers and data on where we stand and where the government intends the economy should go. And we'll invite Tushar and Sachit thereon to give their initial thoughts on the budget. And from there on, we'll pick up few themes of what we believe are the key aspects that the budget touches on. And we'll talk about those from a tax and regulatory perspective. So as you see on the screen, India seems to be on a path of recovery, coming out of a negative 7.7% growth. We are eyeing an 11% GDP growth in FY22, moving it on to a 6.5. Now, of course, 7.7 being a negative number, you got to see the FY22 growth in context of a lower base, and then a 6.5 thereon. The budget clearly is an expansionary budget. It talks about a 34% increase in the capex play out, and which of course means that the fiscal deficit, at least for the next couple of years, will continue to be higher than what has been laid out in the FRBM of 3%. We are looking at a very high disinvestment target of 175,000 crores. And it's very important to note that the last year, all that the government was able to manage based on their revised estimates is merely a 32,000 crores. And that's why I believe it's quite an ambitious number, but the government has laid down a plan on how they intend to garner this kind of money back in their kitty by disinvestments. There seems to be a lot of focus on debt financing and monetization of assets, specifically the land base that is there. And just to highlight some of the key policy initiatives where I think, if implemented properly, could do a lot of good to the Indian economy. They would be in relation to the new securities code, where they're talking about aggregating multiple capital markets laws together. They're talking about creating an asset reconstruction and management company for stressed assets, recapitalization of the public sector banks, and so on and so forth. And on the last point in the slide, we've just highlighted the sectors that the government has identified to be the strategic sectors. And again, a lot has been said and proposed in relation to these sectors if one goes through the text of the finance minister's speech and what's put in the budget. So having provided a very quick and a broad perspective of where we stand and what, at least to us, stuck out to be the key policy reforms that the government intends to bring in, let me invite my fellow colleagues. Sachit, if I may start with you, you want to give your perspective on what's your initial thoughts and what has been your initial reaction to the budget?
Thanks, Sanjeev, and thank you to IGCC for having us here. I think a couple of points which I wanted to make on non-financial aspects is the recognition that unless everybody is vaccinated, the sentiment and the economy may not completely revive. I think the allocation to that aspect of about 35,000 odd crores is an important step. I took great encouragement from there. The second, again, non-tax, non-legal aspect is allocation to setting up or controlling pollution in urban areas. I think another very important step and a recognition that unless there is healthy living, they'll be very difficult to give fillip or encourage the economy. I think those two were important. One aspect which you touched upon, and I just wanted to lay my just express my views on that, was on this disinvestment. I think one of the biggest problems in monetizing the PSUs was the issue of carry forward of losses and the debt which was sitting in these PSUs. Some useful amendments have been made in the present budget, which we'll be dealing with. I think those should help in easing off those restrictions which were hampering the sale of PSUs. I think that's a very important macro level amendment which I saw. The third and final point which I wanted to make was that there is extremely high focus on infrastructure, and you had also quoted on the capex expenditure increase from 4 lakh odd crores to about now 5 lakh plus odd crores of the government. I think that should not only give more fillip to the industry, but also should help ease out the employment stats, which was about 9% unemployment rate last month. So I think those are very positive developments. And as we go further, we'll see how some of the other steps may also encourage revival of the economy as well as encouraging employment. Thanks, Sanjeev.
All right, thanks. Sachet. Tushar, if I may again invite you for your initial thoughts, please.
Thank you, Sanjeev. First of all, I would like to express my gratitude to the chambers. It's always an honor to be associated with an event like this, and also a big thank you to all the participants who have made it today. My initial thoughts on the budget, we'll have to just take a step back, and if we look at our economy, we were in a recession at the start of the last year, and then we got battered and bruised because of the pandemic. After that, in the months of March and April, India saw the most stringent lockdown, and there was a sudden grinding halt of the economic engines. Now, because of that, there was a domino effect in the entire year, and we saw the few months after March and April where the economic activity was zero, and because of that, everyone understood that the only way we can get the ball rolling now is to focus on spends. I think, therefore, taking into consideration this background, there was a huge, massive expectation that everyone had from this budget. Now, has the budget fulfilled that? In my personal opinion, yes, this is one of the boldest budget India has seen. We've seen two big budgets in the past. We saw in 1991 when India was on the verge of bankruptcy, and at the time of Prime Minister Rao, when Dr. Manmohan Singh introduced the budget, there was a liberalization. Then in 97, we saw the budget by the Finance Minister Chidambaram, where there was a massive rise in the markets. I think the current budget can certainly be compared with those two events, and it's the biggest budget which I think this government has delivered. I think the first positive that I see is that there is a boost in capex, and when there is a boost in capex, the government recognizes that there will be a domino effect in the economy. There will be growth. We've heard that there's not much done for the lower middle class and for the unemployed, but if we see the kind of capex the government is allocating, which is a 35% hike from the last year, obviously income will be boosted. There will be greater employment on roads, highways, railways, metros, everything we've seen, huge investment. So I think the finance minister and the government was very bold, even though knowing that the fiscal deficit at the start of the year was 3.5, it's now running into 9.5. They have gone ahead and taken these bold steps. I think the second big is, yes, we saw the health sector crumbling, and therefore the health sector had to be immediately injected. There is a huge 137% hike on that budget. Obviously, that's very welcome. The third, I think, important direction which we see in this budget is the vision of Prime Minister Modi, which is that we need to go towards self-reliance. Atmanirbhar Bharat. I think that is what resonates in this budget. We have seen that the government has gone surgical on most of the industries and sectors. They have recognized that wherever the domestic industry can perform, there has to be an impetus provided to the domestic industry. Customs duties to that extent have been increased. We will talk about all of that in greater detail. Obviously, there is a flip side to it, which is that, is the government of India going protectionist? Are we looking inwards? But I think that's a vision which this government had drawn, and they worked on that vision. So I believe that the budget was bold. It also got sweeter because there were a lot of rumors at the beginning of the budget that because the government is reeling under a lot of pressure, there will be a tax on the wealth generators of the country. The contributors would be, subject to a COVID surcharge, etc. The lucky part is we've not seen any of that. So I think I give a big thumbs up to the budget, and let's discuss in detail what are the steps taken.
Great. Thanks, Sachet and Tushar, for your respective initial thoughts. I think there's a big thumbs up that even the market has given to the budget, as we see the Sensex rallying, crossing 50,000 points, and so on and so forth. So now, if we were to deep dive into some of the more specific points in relation to tax and regulatory aspects, more on changes that has brought in, and maybe some of the changes that were expected and have not been brought in, which you mentioned about the hike in the taxes that a lot of people were talking about, and so on and so forth. And the way we wanted to run this part of our panel discussion was to essentially draw down a life cycle of an investment or a project in India from the incorporation. Ideally, we would have ended it at a repatriation or a restructuring stage, but litigation is inevitable, so we have added that. And then we wanted to cover the various key changes that have been brought in these various steps. And there is an aspect which has got to do with the digital economy, and more specifically now in relation to the taxation of the digital economy, which then kind of surpasses all of this, because it's hard to imagine a business now which is not digitally enabled. So before I get into the specific points on the changes and amendments from the incorporation to the litigation side, I feel it would be better if we talk a little bit on the digital economy taxation first. Now we know that India had brought in, or has brought in rather, multiple taxes when it comes to taxing the digital economy. We had an original equalization levy, then last year we had an equalization levy 2.0. There is SEP provisions, significant economic presence, and then there are provisions under the indirect tax, and so on and so forth. And all this is happening at the back of very serious and a very prolonged discussions that are happening at the international level, more specifically at the OECD, where around 130, 135 countries are discussing and debating how to address the problem or the challenges that a digital economy puts forward with the new business models when it comes to taxation. Tushar, if I may invite you to talk a little bit to the audience about the background where we are today. We know there are some changes that have been brought in the current budget, and how do you see all of this impacting the businesses?
Yeah, I think Sanjeev, this is a big one, and I think this is so to say the elephant in the room, because if we go back a little again on this, look, the entire tax world today has been struggling with the challenges that have been thrown by the digital economy. Just to make the discussion simpler, the traditional rules of taxation, which sort of allocated the jurisdiction of countries to tax, have certainly failed to address the working of the digital economy. Now, if we see in 2015, there was not really a consensus, but there were certain alternatives which were suggested for each country to follow. And one of the alternatives that was suggested was the equalization levy. Now, it was a mere suggestion, and the BEPS Action Plan 1 clearly provided that if any country were to elect the option of equalization levy, then they must ensure that they respect their international treaties. Now, we saw the first avatar of the digital tax, which was called the Google tax here in India, because obviously it targeted primarily Google and digital advertising in 2016. But I think something which is very controversial, and I'm saying so, happened last year, was that there was an expanded equalization levy which was sneaked in the budget without any deliberation. It was not a part of the text of the budget, and it all happened towards the end. And the tax started rolling from the 1st of April. Now, the fact is that there are big question marks on the very legality of this tax, taking into context the Indian legal framework. I'm not getting into too much detail about that, but the fact remains that a lot of countries, including India, have taken this step. And we've seen internationally, France, which imposed a digital service tax similar to India. There was a retaliation by the US administration, and the US administration brought France to the table. And they said that, look, if you are taxing primarily US companies, we would be taxing all the French wines that are being imported in the US and all the luxury, wallets and purses. So therefore, they got to the table and they've deferred it. Now, similarly with India, we see today that, look, the equalization levy, the way it is worded, it is very expansive. Anything which is done online by way of a sale of good or a sale of service is today within the tax net, and the tax is only on a non-resident. Secondly, a tax which is similar in nature is not levied on an Indian counterpart who's selling the goods digitally. Now, because of this primary reason, the United States, the USTR, has initiated a huge investigation against India. They've come with a report, and in the report, they've said that this levy is discriminatory. And they have concluded that it is also unjustifiable and restrictive, and it unjustly burdens the US companies, because I think a majority of the companies which are coming under this net are American companies. So the US has come with their final findings. I'm sure that they will be looking at retaliation. Now the question comes of a lot of diplomatic intervention at this stage. We have to see, because the administrations have changed. President Biden is in, and we'll have to see the camaraderie between India and US. But yes, this is something to watch for. The second aspect is that in this budget, in addition to what was stated earlier, which was very ambiguous, any sort of electronic payment, any sort of agreement or a chain in the entire contract which is done on a digital platform would still be subject to a tax. Now, this is something which is very ambiguous. It would again lead to a lot of questions with respect to the coverage. I'm giving you a very simple example. Suppose there is a company which is in India, and they want a request for a software to be delivered. Now, the question is, will something like this be covered? The fact is that yes, with the way the new rules have been enacted, it appears that everything which has now a digital flavor to it will be covered by this new levy. That's the last point, and before I hand it over to Sachin, there was also one aspect which the budget has addressed, and it's very welcome and everyone was looking forward to it, was that a lot of income which a non-resident receives can also be of a nature which was of a royalty and a fee for technical services, but it may be subject to an equalization levy. Obviously, the government of India is smart, and they know that on royalty FTS, usually the taxes paid are higher, which is 10%. Over here, you're paying 2%. So they've clarified that to the extent there is a royalty in FTS, then of course, it will not be subject to an equalization levy. Sachin, I think you've been handling a lot of these matters. What is your take on this levy and the expansion?
Thanks, Tushar, for laying the background. I think one aspect which you touched upon, I'll just deal with that, and then some of the practical challenges that the companies are facing in this regard, I'll deal with those. I think you rightly mentioned when equalization levy was proposed, the OECD through the BEPS action plan had suggested that equalization levy should be implemented only if it is consistent with the existing treaty obligations. Now, this equalization levy, as we see in the present avatar, is, to my mind, a treaty dodging exercise. It kind of circumvents the tax treaty obligations by putting the tax in a separate code, and then kind of avoid treaty obligation rather than I would say override treaty, but it's kind of treaty dodging in that sense. So I mean, could have been done well, especially some discussion in the parliament, which also never happened. So a lot to be desired of. But unfortunately, fortunately, it's now part of the code and will have to be dealt with. And some of the practical challenges which are coming, and I think two very significant amendments which have been made in the present bill will have a huge ramification for even e-commerce operators, as well as people who are not operating in the e-commerce field. I think one of the amendments says that if the payment of consideration is online, that in itself will trigger equalization levy. Now imagine if you get a book delivered to you at home, but you want to remit the payment online. That even though it's a physical delivery of goods, the contract may have been signed physically, but if the payment is online, that will attract equalization levy. I mean, sounds preposterous. I mein, on one hand, the government seems to be encouraging digital payments, and on the other hand, you kind of disincentivize people from making digital payments. I think that's a little harsh. The second is, irrespective of the consideration received by the e-commerce operator, the equalization levy has now been clarified to be on the entire value of transaction. Now, again, a classic example of treaty dodging in one sense, because let's assume an e-commerce operator sitting outside India is selling goods belonging to a third party which may be sitting in a third jurisdiction. And the equalization levy will not only be on the commission or the fee charged by the e-commerce operator, but also on the sale made by the third party, which has in that sense no skin in the game. And how will the credits be passed on? Because I think most countries have stated that no credit for this equalization levy will be available. So I think a lot of questions today being raised on how this equalization levy will pan out. The third, and I think which is going to be a huge challenge for any multinational working in India, is that if you have provision of services within the group, we have this concept of intra-group services, where one parent renders group services, or for that matter, there are licenses for software obtained at a global level by one parent company and then passed on to other group entities. Now, are we going to impose equalization levy on that passing off of the license also? On a plain reading, it suggests that everything now you do electronically. Like Tushar said, if anything has an electronic flavor, you're going to put a levy on that. And I think that's going to be a little harsh, burdensome in days to come, both in terms of payment and in terms of compliance.
Yep. I think thanks, Sachit and Tushar. Surely the takeaway from the current budget in terms of the amendments seems to be that the government is in no mood to retract. Rather, what they are calling to clarify seems to be expansion of the scope. Point on online payment is a very good one, that it can touch and go far beyond what one would generally understand to be a digitized business or a digital economy, so to speak. One interesting point that Tushar brought up in terms of the USTR investigation, and I feel while of course India has given a short response to it, and we'll need to see how those diplomatic discussions move forward. But maybe that's something that even other countries should consider and think about. I think the only way to stop or curb such unilateral measures is having international pressure. France, in some form or manner, did succumb to it, and maybe some certain level of diplomacy is required as far as India is concerned also. Moving on then, and to the other aspects, and some aspects I would request if we can move faster than others. Coming back to the life cycle of the project or an investment in India, starting from the incorporation. Tushar, you want to quickly talk about key changes that have come in terms of, rather specifically for foreign investors who are looking at setting up operations in India?
Sure. So Sanjeev, as we all are aware, so there's been no change on the tax aspects, specifically the rates, but I think one of the minor changes, but which would certainly help in ease of doing business, is that there is the concept of a one-person company, which was already existing, but not a lot of startups and individuals were going for it because of the limits. It only had a limit of 50 lakh capital and a turnover cap of 2 crores. So if you are a single person and if you really wanted to get into a legal setup where you have a limited liability, up till now, most of the individuals are working in a sole proprietorship model, and where unfortunately there is no separate legal existence from the proprietorship and the person. So ultimately, if there is a liability, it's unlimited. Of course, now there's a welcome step. The limits have been increased for a startup or someone who has, a friction of getting a partner on board, is always looking for getting into a private limited company, a new director, regulatory requirements, so on and so forth. There is a new change which allows an individual to start a one-person company. I think the regulatory, there are a number of relaxations. Also, for a non-resident specifically, earlier it was difficult for a non-resident to start this company, but now there has been a relaxation. So anyone who has been in India for more than 120 days, earlier the limit was 182 days in the previous financial year, that has been relaxed to 120 days. And if you have 120 days, then you are still eligible to incorporate this company. I think that's a great way to access the overseas talent, and this is going to provide a great impetus to startup founders.
Okay, yeah, those seems to be good steps. As far as funding is concerned, because once you have an entity, you need to fund it. I'll quickly mention the key change that has come here, which is for a class of person, so to say, that the government has now allowed debt funding when it comes to REITs and InvITs. So it's again for specific industries and so on, but that has been a long-standing demand for such class of investors, which the government has now heard and implemented. Moving on to the tax rates, and of course, we know that as far as the corporate tax is concerned, there has been no change. Tushar, you can probably talk on the custom side, but very quickly, if you want to just respond with all the money that the government wants to spend and the rising fiscal deficit, good thing, bad thing, or in terms of the corporate tax rates not changing?
I think you have to give credit to the government here. There was a very good temptation to revise the tax rates, maybe introduce a cess somewhere here and there, but I think largely they've not gone through, at least from the direct tax side. I think there's some agricultural cess with Tushar will talk about, but I think they've resisted the temptation. They've not completely gone by the fiscal deficit targets over here. And I think credit to the government of not touching the tax rates and allowing the tax rates and the benefits which were announced last year and prior to that to take color and take shape in the future. The 15% tax rate for new manufacturing companies was a welcome step. The reduction to for corporate tax rates to 22% was another welcome step. I think one which now with the dividend becoming taxable in the hands of the shareholder, I think one demand which has been from the industry is to lower the tax rate, corporate tax rate on foreign companies. And I think it's now time with the abolition of dividend distribution tax on domestic companies, and dividend being taxable in the hands of a foreign shareholder. Maybe that 42% rate, effective rate, would require some relook at that stage.
So, Tushar, one of the other expectations, and picking up the point on the reduced tax rates that the government had brought in some 18 months back, was extension of this 15% tax rates from new manufacturing setups to even the services setup. You see that to be potentially a disappointing aspect of the budget, or you think that the government just doesn't have room to further lower the tax rates?
I think you're right, Sanjeev. Look, the elbow room was very limited. But if you look at the big picture, like Sachit mentioned, now today, if you are a manufacturer in India and you are starting a new setup, you are looking at a tax rate of 15%. I think it's one of the lowest in the world. Even otherwise, for majority of the companies, you are paying a tax rate which is hovering around 25%, which is again not a very high tax rate. So I think in terms of the corporate taxation landscape, I think the government knows that India is a big story. They are eyeing on FDI. And because this budget is actually a culmination of what happened in the last few months, where there were obviously 3 mini budgets announced and all of these tax concessions were given, it is, I think, very, very difficult for the government to give you something on the service side. And mind you, Sanjeev, 60% of our GDP, India's GDP, is services. So therefore, that's something which will be a big one for the government if they would have done it.
What about the indirect tax side, Tushar? Anything noteworthy in terms of changes of rates?
So I think, like I mentioned at the inception, the vision of this government is of a self-reliant India. Now, taking that into consideration, I think on specific sectors there has been a lot of changes. I'll pick up first the mobile sector. Now, in the mobile sector, the nodal ministry, which is called MeitY, the Ministry of Electronic Affairs, etc. That ministry had rolled out a phased manufacturing plan. Now they had already informed the domestic industry that the Indian government will be gradually increasing the duties of customs on all inputs of mobile sector, which includes chargers, battery packs, USB cables, PCB, etc. And they said that, look, we will do it gradually, but you must ensure that parallelly we are giving you a PLI, which is an incentive to make it in India. So therefore, once the impetus is given to you, we'll gradually increase the customs duty. Now, this is what they've done this time. But unfortunately, there has been a very negative reaction from that lobby, and they want to go back to the government. They feel that the R&D in our country still has not picked up, and most of these imports will come from China. They banned China, so ultimately, the overall purpose is defeated, because still the inputs continue to come from China, and the cost is increasing, which is going to impact the domestic industry. Now, on the auto side, of course, we've had some good reactions. We had a similar PMP, a phased manufacturing plan on the auto sector, and that was specifically for electrical vehicles. In this budget, there has been a rate increase on a number of inputs which the car manufacturers require, which is toughened glass, pedals, brakes, frames, etc. Now, the auto industry, by and large, are welcoming this move. They said that this is going to enhance the productivity. It's very good for the domestic industry. I think the third one, which is a big one, is on the textile side. I think there are some 7 textile parks which the government have announced. There will be huge parks over 1,000 acres of land, world-class infrastructure, uninterrupted water power supply. So, the scale of production is going to go on. We are looking at a lot of export, which Bangladesh and Vietnam has, sort of stolen from India, because they've got a 16 billion export market, which this government is eyeing. So I think a lot of your H&M, Zara's, M&S of the world who are currently importing and then distributing can look at what is happening at the textile space. I think that's very welcome, and it's the existing rich units can also look at that. I think these are the 3 main sectors which have made a lot of noise.
Yeah, goes back to the
I had a point there. In terms of this change in rates, how do you see frequent change in GST rates, affecting the long-run business model? Because even in the automobile sector, if you were to look at it, if there are frequent changes in rates, how does it impact a company or a corporation's ability to make budgets and go forward launches of cars, etc.? How does that practically impact?
I think that's very interesting, and thank you for that question, Sachit, because in fact a pinpointed question was addressed to the finance secretary, which is Mr. Pandey, A.B. Pandey, and the industry had asked them that, look, a lot was expected on the GST rate. We are currently looking at 4 and 5 rates. So why don't we look at 2 median rates? And over a period of time, this is what the government had promised, that ultimately we look at maybe 1 or 2 rates and fit in most of the commodities there. I think there is a constitutional body now, which is the GST Council. And the straight answer was that most of these issues now are technically before the GST Council, where there is a representation by the finance minister and all the state finance ministers. So they will be the ones who will be looking at it. You are right, I think, in the automobile sector, because of the cess in addition to the duties, and specifically a very high back-breaking 28% duty on SUVs. Then you have a cess, a green cess. All of that is something which the auto industry has been requesting the government to consider since a while. It's on the cards, but all of this will go to the GST Council, and ultimately they'll take the decision.
I'm just mindful of the time, roughly 15 odd minutes there. Sachit, you want to quickly talk, and I'm moving to the next point on a slide on repatriation and restructuring. Sachit, you want to quickly talk about the key changes as far as the repatriation is concerned, essentially the dividends?
Sure. As everybody knows, last year the dividend distribution tax was abolished and dividend became taxable in the hands of the shareholder. Now, consequent amendments to ease some of the practical difficulties in such taxation have now been made, and I think I'll just briefly touch upon 4 very important but very crucial and positive developments. When dividend is paid to a foreign company, it could have easily been included in their book profits, and there could have been a levy of what we call a minimum alternate tax in India on those dividends. I think government has clarified that no dividend will be excluded in the hands of the foreign company while applying the MAT, and the treaty rates will continue to govern the taxation of those dividends. The second is the payment of dividend by SPVs to these business investment trusts has been exempted from any kind of TDS, because otherwise there was a double taxation, first from the payer, the SPV to the business trust, and then from the business trust to the unit holders ultimately. So that double level of taxation has been avoided, that exemption has been brought in. The third is that FPIs was subject to a withholding tax of 20% on the dividends under domestic laws. That has been done away with. In fact, the amendment clearly says if the FPI has a tax residency certificate and is entitled to a lower rate, that lower rate shall prevail. The fourth and a very pragmatic change which I saw was that the government has actually said that the advance tax on dividend shall be paid on payment basis and not on an estimation basis, because you really don't know in the middle of the year what will be your dividend and whether you'll get a dividend from your investment or not. So I think very pragmatic steps on repatriation of dividend. I think they've realized some practical difficulties and done away with that. Quickly moving on to just touching upon a couple of changes in the restructuring model. I let Tushar deal with the changes in slum sale because he's the architect of this change, or at least he instigated this change. But a crucial amendment in the M&A space has been that the depreciation which was allowable on goodwill has been specifically now disallowed under this act. There was a judgment of the Supreme Court which allowed depreciation on goodwill way back in 2012. I don't know what has prompted 9 years hence for the government to change that. Couple of practical implications could be what happens to the people who've already formed that depreciation as part of the block, and how will that work out? And I think those are a couple of practical challenges which will be seen. One very welcome step which I thought was there and I touched upon in my initial comments was this deemed demerger of PSUs. Now, we saw companies like Air India and other PSUs which the government was intending to disinvest were not getting sold because of the high debt rate and the losses which were accumulated. And under Indian law, if there is a change in shareholding of more than 51%, the losses lapse. You can't carry forward the losses. I think those amendments have been made under the Act to allow even a piecemeal transfer of assets from the PSUs like Air India without transfer of debt, and that will be deemed to be a demerger and hence exempt from any kind of taxation. I think those will give fillip to the disinvestment policy of the government and the ambitious target which Sanjeev was alluding to earlier of 1,75,000 crores may see some light of the day. Over to you, Tushar, and I thought you should.
Yeah. So,
Tushar, you're right.
Sachit mentioned there is a landmark case that you argued very recently on slum sale versus slum exchange, right? We want to quickly talk about that, and then I want to spend the last 8-10 minutes on the litigation side, please.
Yeah. So I think on the transaction side, every time a business is sold on a standalone basis, on a going concern basis, and the undertaking as a is either deemed or sold, the question which the courts have been grappling with is that will this be something that is liable to tax? Now, what actually is being sold is a business as a whole, which means the assets and the corresponding liabilities. Now, from a transaction tax perspective, which is sales tax, obviously there was a lot of jurisprudence to say that what is being sold is ultimately not an individual asset and not property and goods which is getting transferred, but a business as a whole. So therefore, there will be no tax. Now, on the income tax side, we had a concept of a slum sale. Now, this is a matter which I was fortunate enough to argue before the Madras High Court, and the language in the statute at this point in time was that a slum sale is defined as any transfer as a result of sale of an undertaking. So therefore, if you are transferring an undertaking, but you are not receiving consideration in monetary terms, then what we argued before the High Court was that if you look at the definition of sale, constitutionally and otherwise, sale is nomen juris, which means that it has to be understood in its ordinary sense. There has to be a buyer, there has to be a seller, and there has to be a consideration. To the extent I'm giving you an undertaking and say the buyer is issuing corresponding shares, that is not a consideration which is in monetary terms. The second, I think, broad argument there is that if you were to do a transaction like this through a scheme of reconstruction in a company, then ultimately you're selling the undertaking not voluntarily, but through a statutory intervention by the court. So even that would not be regarded as a transfer by way of a sale. Now, this is something which the High Court agreed to, and they said that this will only include such transfers, which is a much wider term. A transfer, as per the Act, includes a sale, exchange, etc. But a slump sale is only covered with respect to a transaction of sale, and they agreed to it. I think that's been negated in this budget, and they have now very clearly said that all slump sale where the consideration even is through an exchange or equity shares, preference shares will be covered.
Yeah, I think that the bad habits of looking at the judgments and then changing the law, now most of the time prospectively, but still sometimes retrospectively, those still remain. Since we were talking about a case law, we were talking about amendments and so on. Let's just move to the last point. And of course, Tushar, Sachin, both of you are renowned litigators in the country. Now there has been a lot of push and a talk that the government has been doing for a long time now, how they want to reduce the litigation in the country. And I'm talking about tax litigation specifically. And with that theme, there have been some changes that have been brought in the current budget also. If I can please have your respective comments, and Tushar, maybe we'll start with you and Sachin, coming on to you, on where do you think they stand, and more importantly, do you see such initiatives helping the cause of bringing down tax litigation, especially for foreign investors?
I think, Sanjeev, Prime Minister Modi and the Finance Minister have realized that if ultimately there's a dispute which goes to litigation, the only person who gains is the lawyer. So I think they've ensured over a period of years that that the lesser the litigation, both on the side of the government or the assessee, the better it is. Now, this is something that we've seen coming, and I think Sachin will speak more about it. On the direct tax side, we saw certain, I think, a watershed moment to say that any sort of assessment and the first appeal now before the tax authority has moved from a physical environment to something which is known as a faceless scheme. So obviously, a lot of people welcomed it. They said that this will ensure that the chartered accountants and all other practitioners are not, spending a lot of time with the tax authorities. Anyone can now pick up a case from anywhere in India, get assessed. There's some other body which is looking at, passing the order, so on and so forth. So there's a transparency and there's more reliability to the system. But we saw a lot of issues. The first big issue in that was that as a matter of right, the assessee was not given an opportunity of a hearing. Now, in a tax matter, which is very complex, and you actually require to go and meet with the officer and explain a lot of calculations, it is very difficult to just pass an order on the basis of submissions. Now, that's something which is already before the Delhi High Court, this issue that whether or not as a matter of right, natural justice has to be given. I think this time in this budget, the government has gone one step ahead, and they have said that, look, we covered the administrative authorities realm in a faceless scheme. We'll go one step ahead, and the fact-finding authority, the final fact-finding authority, which is a quasi-judicial body called the IT80, they said that they also want the IT80 to be faceless. Now, this is something which is very difficult for me to imagine, that you go to a final fact-finding authority and it's faceless. You really don't know where the matter will go, how it will be considered. So let's see how this pans out. Obviously, there will be a lot of hiccups around the way it is done. The second, I think, big problem which the Supreme Court also highlighted in one of their judgments was this forum called the Authority of Advanced Ruling. While this forum specifically for the foreign investors came with a certainty, a stamp of certainty on its back, saying that if you were to start business in India, you're not sure about your tax positions, you go to an independent forum. You get a ruling in a timely manner. That ruling will be binding on you, and no one is going to appeal that unless and until there is something which is, preposterously wrong. Now, that forum, unfortunately, was plagued with a lot of problems, and the Supreme Court highlighted it very recently in one of their judgments, saying that, look, the average time now to get a decision for a foreign investor hovers around 4 to 5 years. The second is there is a huge pendency. And the third is that the entire system, the members are not present. So therefore, you need to overhaul it. Now, there was an overhaul which was required. I think the government did a reverse overhaul where they said, okay, we will dismantle the entire so to call the independent system. We get 2 of our commissioners who will man it. Now, we've seen this on the indirect tax side. We've got similar advanced rulings. Unfortunately, it's just a stepping stone to go there and get your matter, I think, in a time-bound manner to a high court, because if you have 2 tax officers looking at your positions, then it's very difficult to get something which is favorable. So that's something they've done. I don't know whether it is a retrograde step or in the right direction. The third is there's something known as a settlement commission. Again, they've disbanded that. The settlement commission, of course, the idea was that if you've lost onto something, you come out clean. They are saying that no, all of that will also go to a board. The landscape, I feel the litigation landscape overall has seen a tectonic change. The government is very happy with the 2 schemes that it introduced in the recent past. One was on the direct tax side, which was the Vivad Se Vishwas scheme. They've got a huge collection in that, 85,000 crores. The real reason of the collection is something which Sachin will tell us. But yes, there's a huge collection. On the indirect tax side also, there was a scheme which got a very good response. So the government has now also got another scheme out of the assessment realm, which is for small taxpayers, a dispute resolution scheme. So therefore, I think it's very clear the writing is on the wall. The government feels that, the lesser the litigation, the better it is. I think, Sachin, for your comments.
Sachin, I want to ask you one very specific question here, and please do share your general thoughts. I'm turning off my camera. Assume I am the judge. Is this all that's what's there in a faceless IT-80, or there is more to it when it comes to the good and the bad things to it?
Sanjeev, I don't mind not looking at you and arguing before you, but I mind if I don't know whether I'll even get a hearing audience or not. That's the question. I think in the faceless assessment and the appeal, which is currently before the administrative authorities, it is now purely the discretion of the authority whether to give you the hearing or not. Unlike civil law countries, India follows a common law system, and right of hearing is considered one of the hallmarks of a fair administration and a fair hearing. In fact, we are one of the few countries who've gone beyond our source country, the UK, to say that even in administrative decisions, we will require a right of audience. So to say that a judicial authority, it will be discretionary upon a judicial authority to give me a hearing or not is plainly preposterous. And I don't have a problem if I don't know the judge I'm arguing in front of him. And I think that's a positive step. I think the government has some apprehensions of some wrongdoing in the tribunal. Fair enough. I mean, you have a problem. You solve that by saying that don't tell me the person I'm arguing in front of, but don't take away my right of hearing. I think that's the larger question point, which the bars are also conveying to the government, that it can't be at the discretion or at the beck and call of the authority to decide whether they'll give me a hearing or not, because that will be counterproductive. And I'll tell you why. If today, every time I request for a hearing to the tax tribunal, and it has to be first decided by, let's say, the president of the tribunal, whether to give me a hearing or not, that order in itself will be subject matter of innumerable challenges. Each time the tribunal president refuses hearing, somebody will challenge it in court. And like Tushar said, the only people who will prosper are lawyers, nobody else. It doesn't give end to litigation. So I think that's something which is, I would assume that better sense will prevail, and hearing will not be optional, it will be mandatory, although before maybe somebody I don't know, and which is fair enough. The second, and I think a crucial amendment which has been made, which could reignite a series of litigation rather than curbing litigation, which has been the agenda of the government, is the complete change in landscape on what we call reassessment law. I think people would have heard that in India, you can go back 16 years and reopen tax cases if there is a foreign asset involved. And a law has developed on it. In fact, our 1922 Income Tax Act also had provisions for reopening. A lot of jurisprudence has got settled. Unfortunately, 80% of the jurisprudence on that is against the government. So they thought of completely redoing the law. And the new set of law which has been brought in for reassessment will open up Pandora's box, because the language used today is issues flagged by the or the information flagged by the dispute resolution or the risk management team of the Central Board of Direct Taxes will be considered enough to reopen a tax case. I mean, completely subjective. So I think, to my mind, that's going to open another Pandora's box on litigation. Tushar touched upon the authority for advance ruling. Again, I can't believe that in 2015 on the floor of the House, the then finance minister, late Mr. Arun Jaitley, said that we are going to increase the number of benches of the AR because it has proved to be a very effective tool in addressing concerns of the foreign taxpayers. Now, I don't know what has changed between 15 and 21, apart from the change in the finance minister, that this kind of a statement had to be made that we are going to withdraw the authority for advance ruling at all and replace it by a collegium of tax commissioners, who again will be trained by the targets so set by the CBDT on them. So I mean, amendments defy logic and defy the policy which the government is pursuing. But yeah, I'm all smiles because it's only going to increase.
So Sachit and Tushar, I think I'm sure you guys can go on talking from your experience when it comes to litigation, what's right, what's wrong, and more importantly, what can be done to improve with no vested interest of increasing the litigation in the country. I know deep inside, no lawyer, like no doctor wants to increase illness. You don't want to increase litigation. But I'm very mindful of the time. I think we got to put a stop to our discussion right now. I'll hand it over back to Sonia for the concluding remarks, please.
Thank you very much, Sanjeev, Tushar, and Sachit, for such an intensive and detailed analysis of the budget. On behalf of the Indo-German Chamber of Commerce and the attendees, I would like to thank all of you for today's participation. Due to keeping in mind the time, we will now end the session. The coordinates of all the speakers are there on the last slide. We will also be sending the recorded version of this presentation to all the attendees. In case you have any further questions or would like to clarify some points, of course, the panelists are there. Yes, once again, on behalf of the Indo-German Chamber of Commerce and DMD, I'd like to thank you all for today's participation. Thank you.
Thank you.
Thank you very much. And please, we are happy if there are any specific questions. We just wanted to mention that though there were very pinpointed, pedantic changes in the budget, because of the time slot given to us, we picked up the most relevant topics, but we are happy to hear back, and we have, if there is something specific any of the participants would like to discuss, I think please, they do not need to hesitate to get in touch. Thank you very much. The German Chamber, it's an honor to be here.
Thank you so much.
Thank you.